Well, I think looking at the oil situation, I think many analysts have been surprised how high the oil price had been when the physical market was so well supplied over the last couple of years. Of course, you had all the events in the Middle East, political risk premium, etc. But now I think the realization is that there is more than enough oil to go around, at least in the short term. So I think we're now down in a lower range, which will be sustained maybe for the next year or so, probably in a $17 to $90 barrel range. That would be my estimate. Of course, there's a lot of uncertainty, but I don't think we're going to see a return to 110, 120 anytime soon. So the outlook for oil, of course, whilst it's bad for the oil exploration and producers and those majors that have issued a lot of debt recently on the assumption of $110 per barrel, and it's also bad for countries that produce oil. It is a net benefit for the world, for the global economy as a whole. It acts almost like a tax cut and increases real personal disposable incomes and consumption in all the developed economies, which are net importers. So it's good for the background for world growth in 2015. Turning to gold, I think there's probably more downside, more technical correction. But then I think that once it forms a base, that would be a very good entry point, because I think there are risks medium term to the inflation outlook, not for the next year or so, but I think with the printing presses now full on, it's worth having some gold in your portfolio, basically to hedge against tail risks in either direction. I don't really see investors coming back to commodities anytime soon. I think there is a good case to be made for having some precious metals once we see gold form a new base. I think it has further to fall in the short term, but in view of the uncertainties over unconventional monetary policies, in view of the possible advantages for governments being more tolerant towards inflation in the medium term in order to get their debt to GDP ratios down, then gold as a hedge against tail risks, either inflation or deflation, still seems like a good idea to me, although I think we will see further weakness in the gold price in the short term.